Okay, hello everybody. My name is Rachel Onchain. So, before we dive in, I just want to say thank you to all of our listeners, to all of our supporters, and a huge shout out to the Count on Sheep team because these guys have shown up. They've put their faith in us. They're actually our first sponsors for this show. So, yeah, these are our legendary OG Hall of Famers here. So, we're super excited to dive all into crypto taxes and to teach you what you guys need to know about what to do when tax season rolls around. So, we're going to keep it high level at first. We're going to talk about Justin and Nick's story, getting into crypto taxes, and how they got involved with Count on Sheep. So, without further ado, I'm going to pass it off to you guys, and we can kick off with some introductions.
Awesome, Rachel. Thanks for having us. We really appreciate you. We love your show. And yeah, we're excited to be here today.
Absolutely, super excited to have you guys here, and I know you guys both have impactful stories and your reason for doing what you're doing. It's really important work. I can't underscore that enough, you guys. If you're working and earning in crypto, follow Count on Sheep, connect with these guys, schedule a meeting with them. These guys have a wealth of knowledge, and we're going to unpack some of it today, but we also have future events coming up as well, which we'll get into later in the show. So yeah, Nick, we can kick it off with you.
Awesome. Yeah, I appreciate it. I mean, Count on Sheep was born out of necessity. I was losing sleep over my crypto taxes, so it became Count on Sheep. We didn't want to name it after our boring last names, like most CPAs and accounting services. So yeah, really to take you guys back to 2021, I had a tax liability with my crypto, and I've been collecting since around 2016. My tax liability was seven figures. And I felt like I had a target on my back, and I felt like, I need to be reporting these, even though my strategy is mostly buy and hold. There's still trades that were made here and there, and they need to be reported. And my wealth management team is alongside my CPA teams were both looking to do this for me. And as they started out to go about doing my taxes, they both ran into a lot of problems. They were asking me a lot of questions as to like how this all works. And I was paying them top dollar. So I got frustrated thinking, wait, shouldn't you know this? And, it became just kind of a cluster. So I ended up having to fire both of my CPA teams that were working on this simultaneously. They say I owed millions of dollars, which I knew I didn't because I wasn't trading that much. And it was just kind of a big conundrum. So I ended up finding someone in the crypto space that was former Ernst & Young and used her service. It worked out for me. And she was able to save me $996K, on my taxes, so against future gains. So that opened my eyes. A light bulb went off. I came out of retirement after selling my company, and I said, I want to be in this space. I think crypto accounting needs a hero. We need someone that can come in here and create the standard operating procedures for accounting for crypto, because it's very multifaceted. We're not playing checkers, we're playing chess here. And, it certainly needed the right individuals to come on board. So without further ado, I am not a CPA. We have our CPA here at Count on Sheep. This is Justin, and he'll tell you a little bit about his background. He's impressive.
Yeah.
Awesome. Let's go. Thanks, Nick.
Yeah. Hey, everyone. My name's Justin. As Nick said, I'm the lead CPA here at Count on Sheep. Funny enough, I actually also started my career at Ernst & Young as well. I'm a former auditor. I audited multi-billion-dollar companies, names you would know. And a lot of that work actually, carries over to what we do here, that detective work, if you will, the forensics. But I've been trading crypto personally since 2017. I've done a lot of, liquidity pools, yield farming. I even had a trading bot for some time. Over 35,000 transactions from that. It was a complete nightmare. And when Nick came to me and kind of pitched this idea, the light bulb went off as well. It's like, holy, there's a lot of people in this space that have no idea what they're doing. I, as a CPA, was barely, getting to touch what was going on here. And I kind of exited out of a lot of that, DeFi because of that. Is like, I don't know how this is being reported. I don't know, am I supposed to be reporting this? Is someone else doing that? And that's when, it became clear, oh yeah, we really need to flush this out. We need professionals to come in here, make a process that everyone in the country can use, and, accurately report. Because ultimately the goal here is to bring crypto to, bring it mainstream. We want people to, adopt this in mass. We want everyone using crypto. And the best way to achieve that is to bring it above board. And so once Nick came to me, told me about this idea, he's like, hey, we need a crypto sophisticated CPA to come in here and really, get this, above board. I was all for it. So started, developing the processes, started, thinking about what could go wrong, what we can do about it. And that's where we are today is, now we have a fleshed out SOP. We have a process, that we use to basically reconcile, crypto portfolios for both, B2C, like, individual clients as well as, B2B businesses. We do the digital asset accounting for them as well, Web3 projects, or even just, TradFi companies that have crypto on their books. But yeah, I mean, it's been such a great journey. It's been a lot of learning, but, here we are. Now we have, a great process that people can really rely on to, accurately report their crypto while also optimizing their taxes.
Wow. Well, just everything you're saying is putting a smile to my face because there's been so much uncertainty. Like people have a lack of understanding and knowledge because the space is still very new, right? There's a lot of things that need to be fleshed out. And especially in the United States, here in the US, there has been an all out war on crypto. So we need to do whatever we can to take the targets off of our back to show, hey, we're not a bunch of degenerates. We're trying to play by the rules. Tell us what the rules are. Like, let's figure out the taxes. Let's figure out how to be compliant. I told you guys I spent 2 years working on an HR tech company at Opolis. So, I saw the ins and outs of setting people up with their LLCs, with their businesses, but the tax piece is so important. So the fact that you guys are showing up here today and you're doing the work that you're doing in our space, we need people like you to help us make it long-term. Like you said, it's not a game of checkers, it's a game of chess. This is long-term, this is strategic. And the fact that we're doing this, we're crossing our T's, we're dotting our I's. It's really important. Yeah. So next, I really want to talk about also, like you guys shared a bit about your story, but if you have like a certain why in mind, like what is the reason for what you're doing? I'm curious. Like I always like to bring it back to the why and why you're doing what you're doing.
Yeah, that's a great question. I mean, my why was probably trying to motivate myself to do something different. I came from the digital marketing space, had some success there, ended up selling that company twice. And I wanted something challenging. I wanted something in the crypto space. I was trying to figure out where to get in. I've done everything from, investing to mining and a few different things. And they've, all turned out to be okay, but nothing that was, a big change in my life. And I just fell in love with crypto. So I kept kind of looking for where to get my foot in the door to really create something that will create change within this industry. So when I'm looking for businesses to invest in, I'm typically looking for a bottleneck where everything is converging, and I use that I like to use the analogy of that movie 300, where where the Spartans are fighting the Persian army, and they basically take the sea of Persian army and they funnel them through this canyon where they just can't use their numbers against them, and it ends up working out pretty well for the Spartans for the most part. Won't spoil the movie. But with that said, we're looking for those bottlenecks. Where does all of the industry have to converge? And my hypothesis was in taxes. If the governments are going to accept, the only reason governments regulate things is to tax them. It's something that is going to happen no matter what. And as this started becoming more adopted, as we're starting to see the ETFs and BlackRock enter the market, and Wall Street is starting to accept this. We really see a huge need for the accounting piece to be in play. After all, blockchain by itself is a ledger. It's probably the best ledger ever built, to be fair. It's global, and that's accounting at its best. So accounting made a lot of sense, and I wanted to stake our claim here and really figure out how to do the best accounting we possibly can for this industry.
Absolutely. Well, wow, you guys are doing work that is so important to help us with longevity, right? To make sure that we make it, because at the end of the day, I mean, with the U.S. government, that's what it comes down to. They want to make sure they're getting their piece of the pie. So if we figure out the logistics of that and make sure people are, aware and knowledgeable and educated, I think that's a really great first step. So I would like to talk about also mistakes. So what are common mistakes that people make? Like, I'd like to dive in and, just spread some awareness here. What are mistakes that are easy to make? And what are the top things that people need to stay on top of? Maybe this is a Justin question.
Yeah, definitely. So I think before we talk about the mistakes, we first have to talk about how, it's currently being reported. And so what Coinbase, what Gemini, what those, centralized exchanges are doing is they're taking a 1099 and it's basically, hey, we think you got it at this price, you sold it at this price, here's your capital gain. And they're reporting that to the IRS. So we know that, centralized exchanges are reporting. But here's what they're not telling you is that if you traded crypto on one platform and then sent it into one of these exchanges and sold it, that exchange doesn't know what you acquired that crypto for. And so they're going to assume a $0 cost basis on that. So let's say you bought it on Coinbase, sent it out to the, DeFi, and then ultimately brought it back to, either Coinbase or another exchange like Gemini. That exchange is going to be like, hey, we don't know where this came from. We're going to assume a $0 cost basis, and that's what we're going to report for you. And so what we are seeing is that clients are coming to us saying, the IRS is sending me a bill for $100,000. I know I did not make $100,000. What's going on? Please help. And the reason for that is because these 1099s are just not correct. If you're looking at like a regular stock exchange or like a brokerage like Fidelity, let's say, you usually stay on that platform. So you buy the stock on the platform, you sell the stock on the platform. They have all the data, and that's great. But with crypto, it's totally different. No one pretty much only stays on one exchange. I mean, some people do, and in that case, that's fine.
It's completely decentralized.
It's decentralized. It's the whole point of crypto is that, you have a lot of options to move around and go on to different exchanges, bring it to your own wallet, which is everyone should be doing that. And so it works completely fundamentally different than how a stock might work. And so because of that, we need to really address that issue in the system, but we haven't yet. The IRS is still just pulling 1099s from Coinbase and saying, all right, well, they said you got it for $0, so pay up. And so the only way around that is to do the digital asset reconciliation. It's to get ahead of it before the IRS just says, hey, you owe us this amount of money, and you need to report yourself what you're doing. So you need to show that you bought it on Coinbase, transferred it to DeFi, then brought it back to Gemini. If you can show all that paper trail, then you're not going to have to owe all the money that these exchanges are saying you made, or all the gains that you made. And so that's really the big problem, is taking those 1099s, handing them to your CPA, and just calling it a day from there. You're going to be overpaying through the nose, and that's really the biggest issue we see.
Okay, wow. So a lot of good information to unpack here. One question I have, this isn't on my agenda here today, but I am curious, like, let's say, I guess there's two different modes of people or two different ways that people could be trading. They could be using like one centralized exchange, like let's say Coinbase or Coinbase Wallet, or they can be using a bunch of different, DeFi applications or, different wallets, different MetaMasks. What do you think is the easiest way to kind of record all of that and report on your taxes? Is it easier and more, I guess, the best practice to use just one wallet? Or if you're using multiple, does that make it more chaotic and complicated to report on?
It can. I mean, it definitely can make it more chaotic, but there's a really easy solution, and that's just use a software like Coinly. And so, these softwares, we partner with Coinly. We have a really good relationship with them.
We got to get a link on here for the listeners today.
Yeah, definitely. But what Coinly does is you can add in your public addresses for your wallets, and so it's going to automatically pull that data in from the blockchain all on its own. So you don't need to go record hand by hand, or like transaction by transaction what you're doing. It's going to pull in that data automatically. So when it comes to having multiple wallets or a lot of wallets, that's really no problem as long as you're adding those addresses to Coinly as you kind of accumulate them. And then similarly with exchanges, like Coinbase, Gemini, KuCoin, Binance, whatever, you can sync via API to Coinly as well. And so it gives Coinly read-only access to your trade data on that platform, and then it pulls in that data automatically. So really, that's kind of the easiest solution, is make sure you're getting your data aggregated, and then from there, that's where you can do the reconciliation. The piece about that they don't really talk about when they're advertising Coinly to you is that it's not going to be complete and accurate when it's first loaded in. I always say it's kind of like taking a puzzle box and dumping all the pieces on the table. It's not done yet. Someone needs to go in there, put that puzzle together, make sure it's complete and accurate, and then also optimize it for you. And that's where we come in.
Okay. Wow. Well, that really good information here. Nick, I want to pass this question over to you. We talked about successful strategies that we've seen higher net worth individuals and clients using. So is there anything that has worked for your higher net worth clients that maybe some strategies you can share here today with our listeners and viewers?
Of course. Yeah. About the wealthy, there's some tips and tricks that they don't want you to know. And that's because if everybody was using these, you would have, higher regulation probably around them. And it probably wouldn't be, a loophole, or it wouldn't be a trick, or it wouldn't be anything like that. And I use the word trick loosely. I mean, everything we do is, on the up and up, and it's, obviously tax compliant. So, we want to point that out. But there are some things that the wealthier tax strategies, the wealthier are using that just aren't that obvious. And typically you need to pay a lot of money for someone to tell you how to do this, when it's actually pretty, it's pretty easy and a simple concept. One of these things is how to take a loss. And we do that through tax loss harvesting. And that's basically through looking at your portfolio and figuring out what's not working for you. We've been in this hodl mindset for so long. And, yes, we do want to support our communities. Yes, we do want to support those projects that we're really excited about. But hey, if we're going down in the cycle or we're trading sideways all summer, it's time to take some losses and trying to do some, weed the garden, if you will. And you can take those losses against future gains. And that's what the rich are doing. They're not, doing a bunch of hodling. Yeah, sure, they're collecting, their coins over time and that kind of thing. But they're also looking at coins that weren't successful from the last cycle, and they're getting rid of them, and they're taking those losses and they're banking them against the future gains. So that's one of the biggest ones you can do when it comes to tax loss harvesting.
Yeah.
Awesome. And go ahead, Justin.
Yeah, I just want to add one thing to that. So, it's not like you have to stay out of the position forever. The idea here is that you are, you're taking a step back. You're selling your losers.
Justin, it did the loading screen again for some reason. If we could start from the top, awesome.
No worries.
We'll cut that.
Yeah, I just want to add one thing there. And so essentially, it's not like we're saying you have to sell your losers and forget about them forever. It's really more just like taking a step back, dropping them temporarily, reassessing the situation. Do I want to be in this token? Do I not want to? What I like to say is the future is unknown. People hold on to tokens. They're like, oh, it's going to pump one day. I know it's going to, and it very well might. And that, that's good. I hope you're holding it if it does. That's an unknown factor, though. What is known is the loss that you could take if you sell right now. So that's the one thing we do know. So what I like to tell people is let's capitalize on what we know. Let's sell those losers, take that loss, sit back, think about it, make a new decision, and decide whether or not you want to be in that position still, or if you want to stay out. And then, if you decide you want to get back in, you can go ahead and do that. Crypto's property. It's not a security, so the wash loss rule doesn't apply. But as of right now, the 30-day rule does not apply. So you can get back in if you want. But really, it's like just take a breather, get out of that position, take that loss, think about it. If you want to get back in, go ahead. But at least capitalize on that loss right now.
Great. And a great example of this as well would be, you want to get rid of Ethereum's not working for you. I don't know why that would be the coin to choose, but or it'd be some random meme coin more or less. And you would trade it back into USDC, for instance, or some stable coin that you prefer. And then you can go back out and repurchase something else that makes more sense for you. So that's as easy as it is to make this happen,
Wow, interesting. So I'm curious, Justin and Nick, if there are any resources out there. Like, I mean, you guys are just so well versed and educated on this stuff. I'm curious if there have been any articles or things that you guys have read or watched, like any resources that we could share with our viewers and listeners today, so they can brush up and do their homework as well.
Yeah, I mean, there's not necessarily any specific like articles that we've read, but I mean, funny enough, you bring that up. I actually just finished authoring, a blog for Coinly today.
What? That's awesome.
Yeah, specifically for the Celsius bankruptcy. So if any of your listeners were impacted by the Celsius bankruptcy, keep an eye out for the Coinly blog that I authored on that coming out pretty soon. It basically details exactly how the calculation is going to be made on whether or not you have a gain or loss on the distributions, how to treat that, how to allocate cost basis, and all of that. But in regards to brushing up on just general taxes, I mean, I can give a quick lesson right here if you want.
Let's do it. Yeah.
There's two types of taxes. There's ordinary income and capital gains when it comes to crypto. And so ordinary income is going to be whenever you're earning crypto. So whether it's staking, mining, any airdrops, even hard forks, the IRS classifies hard forks as income. So any of that where you're earning crypto, ordinary income. Anytime you dispose of crypto, that's going to be a capital gain or a capital loss. And so what that means is whether you're selling for fiat, whether you're swapping one crypto for another, or even if you're spending crypto, those are all disposals. And so you have to take your proceeds, which is the fair value of that crypto, at that time, minus your cost basis, and that's going to be your capital gain or loss. And that's pretty much it. Those are the two types of tax related to crypto: ordinary income and capital gains.
Awesome. Thanks so much, Justin. Okay, now one thing I want to talk about, which I don't think is really on top of the top of mind for most folks, is deadlines. What are important deadlines? I want this to be evergreen content so folks can come back to this as a resource. So yeah, let's talk about the big deadlines throughout the year that people need to know.
Yeah, I mean, so the obvious one is April 15th. That's your annual filing date. Unless you have, an extension, which you can file for it, and then that'll push you out to October 15th. So April 15th in 2025, we'll be doing our 2024 taxes. But on top of that, if you've, made a lot of money, maybe you invested in a meme coin and it's really popped off, and you've made a lot of money in crypto, and you don't have enough withholdings, for your taxes, you do actually need to set aside some amount and pay the government quarterly, to make sure that they're getting their fair share on a quarterly basis. So most of the time, people that work standard jobs like a W-2 job don't really need to worry about that because they have that tax being taken out each paycheck. But for people that maybe make a lot of money selling a house or make a lot of money on a meme coin, you have to be weary about that quarterly tax payment in order to make sure that you are paying enough on a quarterly basis. And so the deadlines for that are January 15th. June 15th, and then September 15th, and of course, the April 15th. So, those are your 4 quarterly deadlines. But other than that, those are really, what you have to look out for in the U.S. Other countries, they have different tax deadlines, different tax years. We can get into that, but for purposes of the U.S., those are really the key ones.
Right. And for Web3 clients, corporate taxes are due September 15th.
Okay, awesome. Yeah. So, okay, meme coins are really on the rise. I mean, this year in particular, they've been, exploding. So I'm curious, guys, if we can touch really quick on meme coins and their impact on the broader on-chain ecosystem. And what advice would you give to meme coin founders?
Well, yeah, I mean, one of the things I would say are, putting, good accounting practices in play for you specifically, for your company. I say that to all Web3 company clients. They need to have good accounting practices. And what's so interesting is how detailed we can get with our accounting, in crypto specifically, and how we can automate a lot of the accounting as well, because it really is digital money in its true form. So there's some good things we can do there. Proof of reserve is always important for some of these meme coins. A lot of companies kind of got popped last round from the SEC for not having a proof of reserve and not being able to show how many coins they are, have in their treasury at one time. So very important on that side.
Yeah, and then one other thing I want to add is, just speaking candidly here, what's the biggest concern with the meme coin? A rug pull, right? People are very worried about rug pulls. So as a developer, if you're not going to rug pull and you want to legitimize your community and your token, what can you do to legitimize it? Well, the best thing would be to get an accounting service like us to come in, do your books, and that way you can point to your community, say, hey, look, we got accountants working on our books. They're taking care of it. We're not trying to keep this like hidden from the government or anything. We're staying above board. So that's the best way to kind of legitimize what you're doing to help bring people together, make sure that people trust you, is to make sure that you have your books in order.
Yeah, absolutely.
We were walking around Consensus in Austin, a few months back, and we were wearing
a great event.
I had a shirt on that said FTX wouldn't have happened if they had US based accountants, and people were laughing, having a good laugh, and coming up and talking to us. And then later in that, in the conference, the IRS walks up to us. I'm like, oh, what have we done here?
Oh, snap.
We had a good laugh with them. They agreed. And, it's important to have that, accounting background, to get your back. So those things are, legitimizes a lot of what these projects are doing by having good accounting.
Absolutely. Well, I mean, so that does bring me to my next point here. A lot of meme coins have come onto base. So I'm curious, just so we can put this out there to all the founders or anyone earning or working in crypto, let's talk about the next steps. How can folks get started with Count on Sheep?
Yeah, that's a good question. So I think you're gonna post a link to our website. You can book a call with me. It's a free consultation. If you say that you're coming through Rachel, it'll be a free consultation. And essentially what we do is we talk about your portfolio. You'll be sitting down with me personally. We talk about your portfolio, your specific tax needs, any specific pain points you might have, any bankruptcies you've been in, like Celsius, for example, that you might have been involved in, exchanges that have shut down. We'll kind of go through your portfolio, make sure we have a good full understanding. And then we'll talk about how we can get you loaded up into a software like Coinly. And so you'll load up your wallets, your exchanges. We'll help get your, all your data in there. And that's where we kind of take it from there. Is we'll do that digital asset reconciliation. That's, us putting that puzzle box back together. All the pieces are on the table. Now we need to, stitch it back together. And so that's what we do. From there, we'll look at different cost basis accounting methods that we can use for you. And so what that is we're basically trying to optimize your taxes. We want to make sure that you are, staying compliant, but at the same time paying as little as possible to the IRS. No one wants to pay money to the IRS. No one wants to pay taxes. We're going to stay legal, but we're going to make sure that we're minimizing your tax bill. And then after that, we'll also look at tax loss harvesting opportunities. So we'll look at your current holdings. We will see, hey, maybe you're sitting on HEX, for example, and you have $100,000, unrealized loss on HEX. Consider, like we were saying earlier, consider selling that, thinking about it for a bit, making a decision, and then from there you can decide whether or not you want to get back in. But at least for right now, what we do know, get out of that position. You want to take that loss. You want to bank that loss against future gains, offset future gains. So we'll call out some of those opportunities for you, give you those insights. And then the last thing is we just give you your tax forms, your 8949, Schedule D, Schedule 1. It'll be all filled out for you. So you can either hand it to your CPA, or you could just, plug it right into TurboTax and it'll be, good to go, or H&R Block, any of the, the common tax filing softwares. And so, yeah, it's a keep your CPA service. We're just doing the crypto legwork. We're not trying to take you away from your CPA or anything. So pretty much you just get loaded up into, in the software. We give you your tax forms and then you're good to go.
Right. So we want to just, reiterating what Justin's saying is we just want to simplify the complicated. And, it's a 4-step process, as you said, and it's simply organizing, reconciling, overlaying the tax savings, and then providing you the forms. And you guys can file it yourselves, or once again, keep your CPA and have them file it, because that's a lot of things that people like. We don't want to leave our CPA. I have this long-term relationship with them. Just because I hold a little bit of crypto, it doesn't make sense. That's not what we're here to do. We do the tax preparation. We will work alongside your CPA. We stay in our lane. And also we will save you a lot more money than if you were just to use your CPA, who's simply just filing the 1099s coming from your exchanges.
Awesome. Well, you guys, thank you so much. Every time I talk to you, I feel like I learn so much personally, working in crypto, earning in Web3. This just helps me so much to make sure that I'm staying accountable as well, and we can help to educate other people in the space. So like we talked about, the next steps, you guys. So on the description in the YouTube video, on Spotify, and on Apple Podcasts, you can see the links in our description. The first one you'll see is the referral link if you guys want to schedule a free consultation. We also have the HubSpot meeting link, which we'll share for Justin if you guys want to have that free call with him. And then also, you just want to, go do your homework and learn more about Count on Sheep. You can go to countonsheep.com. And again, these guys are just the best of the best when it comes to crypto accounting, you guys. These are true experts. Just to wrap up here and put a bow on this, you guys, do you want to share any closing remarks, any, final comments before we wrap this up?
Yeah, I think just want to reiterate what Nick had, talked about earlier, is, take a loss. If you're sitting on something that's down, don't be afraid to sell it. It's gonna benefit you on your taxes. Yeah, it sucks to maybe lose 10K, but if you sell it, take that loss, you're actually going to reduce your tax bill. So it's not as bad as you think. You can capitalize on that loss. And we really just want to kind of preach that message before we hit this, nice big bull run here.
Yeah, and my last 2 cents would be reiterating what Justin said in the beginning, is really that, we're not anonymous. That's not what crypto is. We have all these on-ramps, off-ramps, KYC, exchanges reporting your information to the IRS. They already have it, so, we're not trying to be fear mongers here. We're just saying, hey, let's get in front of this. And we have a lot of great opportunities for tax savings right now. All the tax laws haven't dried in cement yet for this industry. So there's a lot of things we can utilize to save you a ton of money. And we're glad to do so.
Awesome. Well, thank you guys so much again for taking the time here. We did the Let's Touch Base Twitter space. Now we got this podcast going out. We got a live stream next week. I am so excited about this, this partnership and this opportunity to collaborate with you guys. And yeah, by the way, brought my little puppy up here. He's a little sleepy guy right now, but I worked with the Mr. Miggles team on base and Aerobud, if you know Aerobud. and did an adoption event here in Berkeley and helped work with them. And I brought this little guy home this past week.
So sweet.
Yeah, he's just sleepy right now. But yeah, super grateful for you guys joining. For those of you listening, check out the links in the description on Spotify and Apple Podcast. And if you're watching on YouTube, thank you so much for tuning in. And you can also check out those links in the description. And yeah, we hope to see you guys next time.
Awesome, Rachel. Appreciate you. Thank you for everything you do.
Thank you, everybody.